So I mentioned in my last video that I've been tax loss harvesting in order to maximize how much return I'm getting from my investment. Now, if you don't know what tax loss harvesting is, essentially what I've done is I've recognized losses by selling stocks that I was down on in my individual portfolio that is a taxable account to lower my taxable income. And so that way, when it comes to tax season, my income could potentially be lower and I'd be at a lower tax bracket. Now, on top of that, I've decided that it's probably best for my money to grow completely tax-free in my Roth IRA. So I've been transitioning the funds that I've been losing money on. I've been recognizing that loss. And essentially what I did was sold around $6,500 worth of stocks to transition out of my individual account into my Roth IRA because I haven't made a single investment in it throughout this year. So if you've been to this channel before, you also know that I love dividend investing. And fortunately, the Roth IRA is one of the very best spots that you can partake in dividend investing because any of those dividend payments that are made to you, you're actually not taxed on them. The money's going to grow completely tax-free, unlike in your individual account where they're taxed as if they're forced withdrawals. Now, obviously, the stipulation to this is that you can't withdraw any of the money that you've earned in your Roth IRA until you're 59 and a half or older. However, you can withdraw contributions. And the way that a Roth IRA works is it's a first in, first out type of deal. So if you're making contributions, you get paid a dividend, you go ahead and you withdraw that dividend, it actually pulls as if you had taken from your initial investment. So let's say you invested $6,500. You get a dividend payment of $3. Now you have $6,503 in the account. You decide to withdraw $3. It's going to take that $3 out as if it was part of your initial contribution versus the gain. So that's kind of the workaround to how you can get the funds back out. So today I decided to finally pull trigger, get my financial track back in order. And I sold the portfolio value was around $25,000 down to $19,000. And I'm starting to transfer the funds into my Roth IRA. And it was a little bit bittersweet. Some of the stocks that I was selling, like Realty Income, which has been one of my all-time favorite, producing a monthly dividend for myself. And it's been cool to see that kind of take over my portfolio for a while. And I was up pretty significantly on it at one point in time. And I've kind of decided to rethink because of everything that's gone on the past 2 years of my life. You know, when I started doing the renovation, I paid way less attention to my portfolio. I didn't sell stocks when I should. I really didn't even hop in for about 2 years. And so I want to be even more of a hands-off investor now. So my strategy has kind of changed. And I'm going to talk about that as I'm investing into this Roth IRA. I want to make a quick note on is this was my portfolio rate before I sold. You could see over the past year, it was actually down 7.3%. When you look historically on the market, what the past year has looked like, let me just pop into my Robinhood portfolio here. Looking at something like VTI, which I'm investing in pretty consistently now, it's up 1.48%. So my strategy obviously hasn't been working, but I already know why it hasn't. You see, initially when I started this account in particular, it was something I was doing actively. I was trading and I was really managing the funds and keeping a close eye on things. I was buying and selling. I was updating the channel on when that was happening. And then as soon as I bought this property, it would have been smart for me to transition more into a passive investment style, which I did not do. And on top of that, I decided that it wasn't also worth my time to jump into this portfolio and continue monitoring it. And because of that, it just didn't grow. It simply, it didn't get the results that I would look for. And if I had been actively managing it, I'm sure that I would have bought and sold different stocks and been able to, you know, at least compete with the market as I'd been doing before. You can see historically, when I was paying close attention to this and updating the account, I was consistently getting better returns than what the market was producing. And right now, I'm not confident that I have as much stock knowledge to just jump back in and be at the point that I was at before. And so what I'm deciding is it's probably best for myself, as is with most investors in the market, and especially beginning investors, it's better to get involved with ETFs and funds where you have more exposure to a broader market and less overall risk. Now, real quickly, this is my Roth IRA. I structured this out about 2 years ago in M1 Finance, one of my all-time favorites for just set it and forget it type investing. And you can choose, if you're brand new to investing, funds that have been professionally built, that you can look at historical returns, determine if it's the right sort of style for you. This is the Roth IRA that I've structured out. It follows the Boglehead Lazy 3-step portfolio. It invests in the total stock market index, into international funds and bonds with the percentage breakdown heavily into the total stock market. But I think with so much time that I have for this portfolio to grow, it's even wiser for me to be less in things like bonds and more in the stock market in general. What I'm looking to do with this portfolio, once the funds become available to me, as I mentioned before, I sold the 25 down to 19. I got $6,500 transferring into this account now. And so what I'm going to be looking to do is probably bolster up a bit of my dividend income with something like SCHD, which is a really solid fund that you should check out if you're interested in dividend investing. But I want to just continue charting how my dividend income is going to grow over time. I know that historically on this channel, a lot of people were tuning into this portfolio as I was structuring it out. I think it got up to like 50K at one point in time. And then I had to take some of the funds to move into real estate. But now I'm back to the point where I can start fully funding things, max out this Roth IRA, head back to different styles of investing, and really maximize how much that I could end up getting on a return and be able to passively make from these portfolios that I'm really excited to do. Now, keep in mind with this approach, I'm also not just taking $6,500 and just dumping it into the market. What I'm going to be doing is dollar cost averaging. I'm going to structure out investments on a weekly basis to be investing into the market. And so that way it minimizes the exposure I have at market timing risk points. So let's say that I invested all $6,500 today, the market completely tanked. Well, I just lost out on some profits that I could probably see in the future if I were investing as it was dropping and then it turned around and went back up. So that's kind of the approach that I'm looking to take. Who knows what's to happen on the market? I mean, we're at pretty high levels right now. And whether you think there's something like a recession coming or not, it just really helps with the exposure you have in your portfolio. Now, I'm going to say I am super excited to be back in the investment realm. I'm going to be shoveling money into these accounts to be able to maximize myself and get myself propelled towards financial freedom. So thank you guys so much for checking out this video. Tons more to come. I'll have an update video soon on my entire net worth, where I'm at with all these portfolios, the dividend income that's being produced. Can't wait for that. Thank you guys for checking out this video and have a great day.